Good evening and welcome back to the latest edition of the InvestTalk Market Analysis for the week ending December 13th, 2024. Hope everyone's having a wonderful holiday season. I am host of InvestTalk Justin Klein, and I am titling today's video Inflation Returns as Investors Position for 2025. We're just a handful of weeks away from, a few weeks away from 2025, and the market is frankly a bit boring. Now, certainly we had a lot of red on the screen this week. Just look at the sectors. Yeah, the Mag 7, Tesla up 15%, Google up 10, Apple, Microsoft, Meta, Amazon, Broadcom up 32% on the week. Some great earnings. But outside of that, not so hot. You're talking about, financial selling off, healthcare continuing to be weak, consumer staples, kind of a mixed bag, but some of the bigger names like Procter and Gamble certainly hurting. Utilities down big, and this is the bond proxy situation. So I'll pivot over here in a minute, but I just want to go over some economic news over the past week. You had last week you had ISM services PMI tick down, same with new orders and employment. So certainly some weakness on the majority of that market. But you had the our trade balance actually shrink a little bit. So that was actually a bit of a positive for GDP in the fourth quarter. Non-farm payrolls that was came in at 227,000. So you continue to see a job market that it's not great, not terrible. It's just fine. Sentiment is improving. Could that be with new administration? Potentially. Consumer prices are ticking up, though. And this is what I'm talking about with inflation returning. Consumer prices ticked up to 3.75, or sorry, 2.75, 2.6. I think inflation's headed back to probably 3 level sometime next year. Core consumer price index that ticked up a little bit as well, month over month. And you're same with producer price index year over year up to 3%. This is usually a leading indicator for real inflation in the economy, what the producer's cost is. Export prices were up again to the highest level in 5 months. Import prices year over year up 1.29%. Once again, that little dip in inflation over the past few months, but it's coming back once again. And so that's kind of what the market, what's happening here is, and the market's starting to price that in. Now, there's the 100% chance there will be a 25 basis point cut next week. We do have Fed week coming up, and it's just 4 days away, right? So, uh, that's known. So don't think the market's going to react to that. It's 100%. Look at 100% priced in. Oh, I guess it's 96. I didn't update it. But if you go out to March, you have one more rate cut potential after that. But then you get out into June, July. Maybe we get to 2 rate cuts all the way to December. That's kind of the base case is 2 more rate cuts through next year, but that's very different than where we were just a handful of months ago. And I think as inflation reaccelerates, this could be the last rate cut of this cycle. Now, for political reasons, I could easily see him doing one more early in the Trump administration and kind of see where everything is at, get the Fed funds rate down right around that 4% mark. Now, real rates will still be negative, though, right? Because you have the rates at 4, inflation at 2.5 to 3%. So that is still restrictive, but the economy looks fine right now. Obviously, some potential shocks with the new administration, but we'll see how that evolves. Now, let's pivot over to the charts here and just take a look at some of the major indices. Okay, here is the NASDAQ just powering higher. But if you look at the other broader indices, the S&P was flat on the week. And if you go over to like the IWM, small caps were down. You look at the NYSE, that was down as well. So certainly some weakness, and it was really bad on the back of this, right? We talked about inflation creeping back in, and this move down in bonds, the 10-year. This is certainly something you want to pay attention to because this could be signaling that next move higher in interest rates. Go look at a weekly chart here. Right, this is the 10-year bond, right? So if it goes down, means interest rates are rising. This peaked back in 2020, this huge drawdown, and then rates have come down a bit, so bonds are rallying. But overall, this is a bearish pattern, right? This is just a counter trend rally in a downturn. And so, with our deficit situation, with inflation continuing to edge higher, I would be concerned about, once again, longer duration assets. So I'll be very interested to see this chart right here. So this is the growth to value trade. This is the weekly chart. We peaked out in 2022, or late 2021, excuse me. Had that rally failed, and now we're retesting that level. Are we going to get above it? I think it's a crucial time in markets as we close the year and headed into next year. The MACD is telling you that actually this momentum isn't very strong, and probably will fail here, but we shall see what happens there. On the credit front, you did get a bit of weakness here. This is short-term junk, short-term treasuries. So, is this signaling the Fed will have to tighten policy, and that could create a default cycle? I do think you're starting to creep up on a little more risk in markets. So let's just say that. Let's look at gold. GDX has definitely had a nice pullback, but if this holds, this is very bullish, right? So it really needs to hold this low from November. If it doesn't, that could be mean worse things for the gold miners. But gold in general, that's just an uptrend pullback. Kind of something similar to this. I expect this to reaccelerate as we head into next year, especially if the dollar. You know, uh, get some potential weakness. I could see that happening as well. This is losing a bit of momentum here, but certainly an uptrend. No real issues on that front. Let's go over to the move index and the VIX. So this is down. If this starts to creep up again, obviously that would be a big worry. But right now, 84, no real issue there. Actually, sorry about that. Let's go to the VIX. So the VIX also remains slow, 13, 14, no real worry there. But if you look at the VVIX, this is the volatility of the VIX. You saw that creep up a little bit last week, and that means that people are making bets that the volatility will soon expand and increase, and that would create more market volatility. So I am getting signals here that early next year you could see some market disruption. Let's just say that. We're in the holiday season, though. I don't really see huge volatility, but as I've been saying, as we get closer to 2025 and then deeper into 2025, more volatility is likely. And it's just more about market structure, which right now is certainly holding things together and likely will hold things together until middle of January. But you can only ignore the inflation picture, higher interest rates for so long, and that would create a risk-off environment. And I could see, some of the high multiple names take a bigger step back next year. I do think next year is going to look uh, more similar to like a 2022, even though markets were down big in that year. I don't necessarily think it's going to be a major down year, but I think it's going to be a choppier year. I think going to be um, some good things that comes out of the new administration, some things that's going to hurt the market. Obviously, inflation is likely to accelerate next year. That would potentially precipitate a Fed tightening policy, or going back to a more hawkish stance. They're mildly dovish right now, but that mildly hawkish stance would certainly shift, I think, sentiment in the market overall, and that's something I will be continuing to watch. The yen. This is the yen carry trade. This is another area where I think things are fine right now, but if this does get a move higher into next year, obviously that could be another catalyst like it was in July for a yen carry trade unwind and a modest pullback in markets. So that's certainly on the radar, as well as I just monitor markets. Frankly, the market's been kind of boring, really up until this week. Silver got a bit of a pullback, but that's holding good support. I'm just trying to scan my list here for anything that I think is important to talk about. Industrials, those are getting some weakness as well. The initial bullishness from the Trump the Trump win. Even if you look at things like transportation,
those are weak as well. So certainly some weakness that is creeping into market. So I want to keep you abreast of that, and this is a time not necessarily get super cautious, but I think patience for adding new positions is probably prudent at this time. Well, that about does it. Appreciate you all tuning in and liking and subscribing to this video, and our podcast. So hope everyone has a wonderful weekend. Reminder: the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful holiday weekend.